Many will recall the eco-craze of 2017 as crypto startup projects raising capital exploded onto the scene from May of that year, with Bitcoin hitting all-time highs and surging above $15,000 by December. Projects flooded the market seeking capital to mint new coins and promised groundbreaking changes. The eco-landscape rapidly descended into chaotic scenes of indiscriminate buying and selling, often for quick profit, disregarding long-term sustainable growth and investor interests. Hype and expensive marketing campaigns often misled investors, many of whom succumbed to greed instead of performing even cursory due diligence. Though there were many excellent projects, some still with us today, many were fraudulent, ill-intentioned, or at best, misguided. The SEC gave notice that it considered many tokens as securities and would apply to how it tests coin projects. This significantly dampened the market, and in the end, some studies identified more than 80% of all ICOs as scams, earning the badge of shitcoins for many from the ICO boom. This was not crypto's best day, and the sector did little to engender legitimate and responsible inclusion within the financial system with policymakers and regulators, and this sentiment still lingers in the corridors of power today. This is the principal reason many in my global community came together to form Global Digital Finance, an industry not-for-profit organization focused on developing and sharing leading market practices and standards for the crypto and digital assets sector. Many of us were called to action to demonstrate that the crypto and digital assets sector was founded, staffed, and run by responsible people who can abide by jurisdictional and global laws, and we're keen to support policymakers and regulators with meaningful compliance, while asking for patience. The big message was, there are adults in the room, and there is some groundbreaking innovation going on here that is of benefit to society. Let's not get lost in the technological jargon, and please exercise a bit of patience. Characteristic of bubbles that burst, a slump followed this high point, commonly known as a crypto winter. There was a silver lining to those dark days, in that it proved to be a time for learning from mistakes for many and rethinking the future of crypto. A wave of pioneering crypto-based incubators, accelerators, and venture capitalists emerged, aiming to restore normalcy and rekindle the flame of innovation. In addition to discovering and supporting genuinely promising early-stage startups, incubators significantly broadened the scope for capital formation and accumulation in the blockchain and cryptocurrency sector.